We are nearing the climax stage for what is likely to be India's largest initial public offering. LIC lists on the exchanges, but the Dalal Street has had a very uncomfortable history with large IPOs. Before we speak about that uncomfortable history, let's look at some precedent which we have around large IPOs. LIC is raising about 21,000 crore, largest ever fundraise with the smallest dilution which we've seen of about 3.5% stake. It will be followed by Paytm, which raised 18,300 crore, and then comes Coal India with its 15,200 crore issue. We also have GICRE, SBI Card and Reliance Power, which raised anywhere between 10,100 to 11,300 crore. Now on the subscription front, LIC IPO was oversubscribed 2.95 times with high interest coming from the policyholder category, getting oversubscribed 6 times. Paytm was oversubscribed 1.95 times, GICRE about 1.4 times. Both issues saw strong interest coming from the QIB investors category. The subscription numbers for Coal India, SBI Card and Reliance Power were also very strong, but again, the interest largely came from either the QIB or the HNI category. Interestingly, LIC becomes an exception, where the interest for the issue of this large size came from policyholders, which at the end of the day are retail investors. Now let's talk about the precedent on how these large IPOs have fared on the listing day. Paytm listed at a discount of 9%, ended its maiden day down about 27%. GICRE also listed at a discount of 6% and ended the day down about 1.5%. SBI Card listed at a discount of 13%, ended the day with a cut of about 9.5%. The only exception to the listing disappointment was Coal India, which listed with a premium of 17%, ended the day with a premium of about 39%. But there is no exception when it comes to these large IPOs being long-term wealth destroyers. 4 out of 5 largest IPOs have destroyed investor wealth, where investors in Reliance Power, Coal India and GICRE as well as Paytm have lost anywhere between 20 to 96% of their investment. SBI Card is the only exception, which is also just trading around its IPO price but still has not made any money for its IPO investors. Coming back to LIC's listing, any individual who has received allotment wants to know two things. One, how will it list, and going forward, if the individual wishes to hold on to his allotment, would the company create value for him? Answering the first question, valuation is certainly an important factor in determining how the stock would list, and LIC is attractively priced as far as the valuation front is concerned. Also, this, if you look at comparison to private players, it will look much more attractive. Now, would the stock create value for its investors? The most important catalyst would be how LIC enhances its margin. LIC's VNP margin currently stands at about 9.9%. Private players derive a much higher margin, anywhere upwards of 25%. But LIC chairman made a big statement in his answer to CNBC-TV18. He said that it will take less time for LIC than private players to reach 20% levels post-listing. Investors will have to wait to see how the company executes this. What can help LIC enhance its margins? 3 things. Focus on non-par segment, shift towards bancassurance, and the third one, distribution and focus on retail business.